All right, welcome to this explainer. Today, we're doing something really cool. We're going to take some incredibly dense financial documents and turn them into a clear, plain English story. We're looking at Horace Mann Educators Corporation, which is, honestly, a fascinating case study in how a super targeted, niche business strategy actually plays out in the real world. We'll be doing a deep dive into their Q1 2026 results straight from their SEC filings and market data. We want to know exactly how they're making their money and, more importantly, what those numbers actually mean for their bottom line.
So here's our quick roadmap for today. First, we'll look at the educator niche advantage. Then, we'll hit the Q1 2026 income highlights, peek inside the balance sheet, check out Wall Street analyst forecasts, and wrap up with core earnings and profitability. Let's jump right in.
Okay, Section 1, the educator niche advantage. To really understand Horace Mann, we've got to understand who they serve. It's honestly a masterclass in niche capitalism. Now, right out of the gate, you might be thinking, isn't it completely counterintuitive to limit your customer base? Like, why on earth would a massive financial services company decide to target only teachers and educational staff? Why intentionally ignore the rest of the entire market?
Well, it comes down to focus. Horace Mann provides a highly specific suite of products. We're talking auto, home, and life insurance, right alongside retirement annuities. And here's the kicker. By tailoring these exact products to the unique financial needs of educators and their families, they build incredibly strong customer loyalty. They aren't trying to be everything to everyone, Actually, they're just trying to be the absolute best option for one specific demographic.
Moving on to Section 2. Q1 2026 income highlights. Let's follow the money and see if this hyper-targeted model actually translates into real, profitable growth on the top and bottom lines.
Starting right at the top line, total revenues jumped from $416.4 million in the first quarter of 2025 up to $429.3 million in Q1 of 2026. That's a solid 3.1% year-over-year increase. It really shows that even playing within a restricted niche, they're still finding ways to expand that revenue footprint. And that translates beautifully to the bottom line. Once you strip away all the claims, the benefits, and the day-to-day operating expenses, the company secured a highly impressive $41.2 million in net income. And remember, that's over just a 3-month period.
So why does this matter to you as an investor or analyst? Well, that massive top-level profitability trickled down perfectly to the per-share level. Basic earnings per share actually grew from 93 cents in Q1 of 2025 to $1.01 in Q1 2026. That's nearly an 8% year-over-year growth. It proves the company isn't just bringing in more money, it's super efficiently returning value on a per-share basis.
All right, Section 3, inside the balance sheet. Let's peek under the hood at their financial footprint to really grasp the sheer scale of Horace Mann.
And the scale here is literally massive. We are looking at nearly $15 billion, $14.96 billion to be exact in total assets, which is largely driven by their huge investment portfolio. Now, if we contrast that against their $13.49 billion in liabilities, which are mostly future policy benefit reserves and account balances, we can see they maintain a rock-solid $1.47 billion in total shareholders' equity. That is a seriously sturdy foundation.
When we pull the actual line item straight out of their SEC Form 10-Q filing, we get to see the true granularity of that equity structure. Out of 75 million authorized shares, they've got over 67 million shares of common stock currently issued. Right below that in the primary documents is another absolutely vital piece of the puzzle, their treasury stock holdings. This represents the shares the company has bought back over time, carrying a cost of over $571 million. And generally speaking, share repurchases are a great sign. It usually means management really believes in their own financial stability, and they want to consolidate ownership.
Moving right along, Section 4, Wall Street analyst forecasts. Let's measure the market sentiment and see how Wall Street is actually interpreting all these figures.
Looking objectively at the data from analyst aggregators, we're seeing a generally positive consensus here. As of our data capture, the stock was trading right around $46.97. Meanwhile, multiple analysts are projecting forward-looking target prices ranging from $51 on the low end all the way up to $53 on the high end. Basically, this tells us that, on average, the street is definitely seeing some upward mobility for the stock compared to where it's trading right now.
But what should you actually take away from a $1.9 billion market cap? Honestly, in a vacuum, that number doesn't mean a whole lot. We need context, right? And when we look at their mid-cap insurance peers, it places Horace Mann right in the middle of the pack.
They're slightly smaller than HCI Group and Stewart, but they're larger than Kemper and ProAssurance, so they're a very solid middleweight contender in this specific sector.
Okay, Section 5, Core Earnings and Profitability. In this final section, we're going to act as your personal translator. We'll cut right through all that heavy accounting jargon to explain how Horace Mann's management actually evaluates their own success.
You see, standard GAAP financial reports kind of bury the lead sometimes. Because insurance companies hold these massive investment portfolios, standard accounting rules force them to report unrealized gains or losses whenever the market fluctuates. But management, they prefer to look at core earnings and core ROE. By doing that, they strip away all the noise of those temporary market swings, giving us a much clearer, true-to-life picture of how the actual insurance and annuity business is performing underneath it all.
So, the absolutely crucial point is this. Their annualized core ROE for the first quarter hit an impressive 12.8%. When you just block out the wild swings of the broader investment market, you can see that Horace Mann's core operational efficiency is incredibly strong. They are firing on all cylinders. Now, before we wrap up today, we absolutely have to highlight this essential disclaimer taken directly from the market data. As always, past performance never guarantees future results. Every investment involves some level of risk. And explainers like this one, they're just your starting point. You should always conduct your own research before making any financial decisions.
I want to leave you with one final thought to ponder as we close out. We've seen the impressive Q1 growth, their steady core ROE, and their really solid market positioning. But here's the big question. Can the sheer power of a niche sustain this level of growth forever? Or are there hidden risks to ignoring the broader market when economic tides start to turn? It's a fascinating question for any hyper-focused business. Thanks so much for joining me on this explainer, and keep asking the right questions.